Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, March 2nd, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London. It's 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. The Dow Jones Industrial Average right now is at 68.61, the lowest it's been since 1997. And we thought that ending February was going to be good news here on the first business day of March. What will be next? Well, here's one thing we could have bet on. AIG again. AIG has once again been aided by the United States government. This time over the weekend, a new $30 billion lifeline has been thrown to the ailing giant as part of a package that includes spinning off part of its property and casualty business in an IPO. This latest rescue bid, the terms of which were approved late Sunday night, comes as AIG unveiled the biggest quarterly loss in U.S. corporate history. That loss was, drumroll please, $61.7 billion. That dwarfs their AIG third quarter loss of $24.5 billion, as well as its fourth quarter 2007 net loss of $5.3 billion. With attempts to execute an asset sale to pay off its government loans stalling, the latest measure represents a change of tack with the separation of the AIG empire into separate capital structures. Here's a name that's been put forward now, Paula Reynolds. She's the vice chairman of AIG and the head of restructuring. She was quoted as saying that AIG is redirecting the divestiture process away from relying solely on immediate sales for cash and will instead use a greater variety of tools to maximize the values of the individual businesses. Of course, Edward Liddy, who's the company's chairman and CEO, had been the one indicating that the best way to deal with the crisis was to sell the stakes individually. Liddy said that the newest plan will see that two of AIG's biggest units will be put into special purpose vehicles. He announced that AIA and the American life insurance company, Alico, will be placed into special purpose vehicles, which ultimately may include a public offering of shares depending on market conditions. Liddy said today that he had received proposals to acquire all or part of the share capital of both units. AIG maintained that the proposals are only preliminary and are being reviewed now. AIG has decided to retain Phil-Am Life together with the operations of AIA. Liddy said that he intends to contribute the equity of AIA and Alico into special purpose vehicles in exchange for a preferred and common interest in the SPVs. This will enable the Federal Reserve Bank of New York to receive preferred interests in repayments of a portion of the FBNY facility. These transactions will reduce AIG's debt and interest carrying costs while allowing AIG to continue to benefit from its ongoing interest within the SPVs. Liddy said the ultimate success of our restructuring plan centers on ensuring that the unique businesses that make up AIG can thrive on their own. While this process may take up to several years to complete, we will ultimately create stronger, sounder businesses worthy of investor confidence. Liddy was on CNBC a little bit earlier today and indicated that for right now, AIG is stable. However, it's quite possible that they'll be coming back to the government for additional assistance. AIG stock now is up, all the way up to 48 cents. It's up 15% this morning. AIG stock is 48 cents. One other bit of information that came in over the weekend from the Oracle of Omaha, Berkshire Hathaway. Warren Buffett's insurance and investment company barely broke even in the fourth quarter because of losses on, guess what, derivative contracts tied to the stock market. Profit fell 96%, the fifth straight quarterly decline, and Berkshire's net worth tumbled $10.9 billion in the final 3 months of 2008. Net worth per share fell about 10% in 2008, only the second decline since Buffett began running Berkshire in 1965. In his eagerly anticipated annual letter to Berkshire shareholders, the Oracle offered a gloomy economic outlook, saying, quote, the economy will be in shambles throughout 2009, and for that matter, probably well beyond. Still, despite what he called, quote, paralyzing fear resulting from the credit crisis and falling home and stock prices, he remained optimistic about American resilience and praised government efforts to avoid a cataclysmic breakdown in the financial system. Buffett said, though the path has not been smooth, our economic system has worked extraordinarily well over time. It has unleashed human potential as no other system has and will continue to do so. America's best days lie ahead. Quarterly net income for Berkshire sank to $117 million, or $76 per Class A share. This is down from $2.95 billion, or $1,900 a share a year earlier. Revenues also dipped 12%, down to about $24.5 billion. Lloyd's insurer Amlin this morning posted a 77% fall in 2008 net profit, dragged by higher insurance claims, lower investment income, and lower underwriting profit. The company did say that its capital position remains strong and sees strong opportunities for growth this year and next year. Amlin said that net profit was about £80.3 million, down from about £353 million in 2007. That's a big drop. CEO Charles Phillips said the results, quote, demonstrate the quality of our underwriting businesses as well as our focus on risk management. And State Farm on Friday reported its net worth dropped $10.5 billion to end the year at $53.3 billion, and an after-tax loss of $542 million for 2008. The Bloomington, Illinois-based mutual said that the primary reason for the decrease was the $9.2 billion decline in the value of the property and casualty company stock portfolio. The drop comes after 5 consecutive years of net worth increases, and despite the decline, the company's net worth is 68% higher than it was at the end of 2002. State Farm reported an after-tax loss of $542 million in 2008, compared with net income of $5.46 billion in 2007. State Farm reported that the P&C's company's pre-tax operating loss at $2.1 billion in 2008 included the underwriting loss of $6.3 billion. Total revenue was $61.3 billion for 2008, compared with the 2007 figure of $61.6 billion. In an analyst's note, Meyer Shields with Stifel Nicolaus Analytics called State Farm's weak underwriting results good news for its competitors. Mr. Shields singled out Allstate, Progressive, and Erie Insurance as beneficiaries. The results, he said, mean State Farm is not charging enough premium and will have to make up increases to compensate for the losses. One other bit of news on this is that the State Farm Chairman and Chief Executive Officer, Edward Rust, earned $13.66 million in 2008, up, everything else went down. He went up from $11.71 million in 2007. His salary in 2008 included a bonus based on the company's performance during the strong years of 2005 to 2007. He's scheduled to earn $9.35 million in 2009, with his bonus based on the company's performances in 2006 to 2008. Unusual way of doing things. The stock market is down about 6,800 right now, down 202 points overall. We'll go to a word from our sponsors.